Imagine watching a massive market breakout, only to realize your lagging indicators signaled the move far too late. Standard technical tools like the RSI or basic moving averages calculate where the price has already been. Because they rely on historical data, they often fail to register aggressive shifts until the opportunity has passed. This problem compounds when you hit the 3-indicator limit on free tier platform accounts. You are effectively locked behind a paywall, forced to rely on a limited set of lagging tools. Professional desks operate on a different frequency. They map high-velocity order flow and target active liquidity pools, viewing the market through the lens of supply and demand rather than historical price lines. Surviving the 2026 market doesn't require a premium software subscription. It requires exploiting open-source code to uncover the same market structure data used by institutional traders. Breaking past that 3-indicator paywall starts with a technique called Pine script consolidation. Open-source developers have built all-in-one utility scripts that take your essential indicators and consolidate them into a single compact module. This strategy instantly frees up your remaining slots for heavy-duty institutional tools. We fill the first open slot with the Auto Fair Value Gap, or Auto FVG script. This tool detects the specific footprints of algorithmic imbalance. This chart automatically highlights zones where algorithms drove price aggressively, leaving a structural gap. They are programmed to return to these specific zones to mitigate the imbalance, providing a high probability entry point. To pair with this, we add a script called liquidity swings. This tool automatically plots the specific price levels where retail stops are likely clustered, often just above previous highs or below previous lows. By combining fair value gaps with liquidity swings, you stop reacting to what the price did 5 minutes ago. You start anticipating where the market needs to go to find its next pool of orders. Massive order turnover and extreme market volatility erupt specifically when the London and New York trading sessions overlap. The session volume profile script identifies the point of control, the specific price level with the most trading activity. When price stretches far from this high volume level, it is statistically likely to revert toward it. Traditional moving averages often fail here. During high volatility sessions, standard lines trigger false signals and induce retail participation right before the trend reverses. Kaufman's Adaptive Moving Average, or KEMA, solves this by adjusting to market speed. It remains flat during noise and accelerates only when a clear trend emerges. The final safeguard is the multi-timeframe dashboard script, which tracks the trend direction of the 1-hour and 4-hour charts while you execute on lower timeframes. Executing a 15-minute trade is statistically compromised if the dashboard reveals that your position contradicts the primary institutional flow of the higher timeframes. Integrating session volume profiling, adaptive filters, and multi-timeframe alignment turns a chaotic screen into a structured map. The system actively filters out algorithmic fakeouts by focusing on where the volume actually resides. This is the result, a fully upgraded, consolidated interface. Every layer of this market structure data is achieved using a standard free account. This configuration provides the same structural data, liquidity zones, volume profiles, and fair value gaps, that was once accessible only through expensive, high-tier proprietary platforms. The 2026 landscape rewards those who can interpret market intent. The edge doesn't come from the cost of the software, but from the ability to identify where liquidity is trapped. Audit your own workspace today. Replace one lagging oscillator with an automated liquidity script and observe how the market interacts with those levels. By pairing this upgraded terminal with strict risk management and an execution platform built for speed, like FXNX, you can stop following the herd and start tracking the smart money.